Yeah. So now, okay, let me break that thing down. So that guy, he made a mistake. Now let's go to 5 minutes. Did he mark it from 5 minutes? And he go. So this was what he marked. Now you call a point. Let me show you guys something. Let me remind you guys something. Now you call a point a flip zone, right? Like this guy right now, this guy here. This guy right here is a flip zone. Which means if we have this sell and he buy, then the market will come back here and buy. That is the meaning of a flip zone. Because this is the last, this is an order block right here. And this is the reaction from the other block. So like I told you guys, it's sold. So for this other block to sell, this guy is a trade zone for this buy. So anything that makes it react a little bit and fail, then they will come back to reclaim it right here and buy. So now, let's draw this out. This is what we have. High, low, high, low. Then the high. Then the market came here, do this and sell. So if you call this guy, and there's the other block right here. So if you call this guy a flip zone, it means market flipped from a supply, from a demand, now to a supply. So which means the first thing, and you have another block here. The first thing that should come to your mind is, it is not this other block. Like I told you, every other flow will experience mitigation. So market will come to the flip zone first. So which is why market will not come here. It will have to sell from here. And another reason why market will not come here is that, why would market come here? It's all about why. And when I say why, is market does not just retrace. Market retrace because of internal liquidities. So the next question is there any internal liquidities very close to this guy as at this point in time? No, there's no internal liquidity, which means this guy is nothing. But looking at this one now, market got here, traded around this guy, broke all these structures, create liquidity right here, then clear it, then sell off. And you can see the base right here. Okay, so that is why I said, so that is the mistake the guy did. And I'm sure I won't be able to make it again. If you call a point a flip zone, market needs to come back as a break and retest to it. Market needs to come back and retest it and sell off. That is the purpose of a flip zone. Look at this guy. This guy is a flip zone. Why didn't I wait for this one lower here? It's because it is a flip zone at this point in time, because this high created this low. And this is the last sell before they took it out right here. So this is my flip zone. So if I want to like draw it how you drew it, I will have drawn it like this. Like this. And the test back of it is the origin of the buy. Simple as that. Okay? So that is that. So let's go back to the one we were explaining before. So, and then I will now explain the trick that I explained to you guys. And you will see that that stuff happens like magic. Very, very simple stuff, but it is everywhere, for real. I think I've explained it in one of my bootcamp before, but the fact that you don't make emphasis on some things, people don't take it serious. So now, I'm coming on. Let's go to the left. I want to finish the breakdown that I was doing. Baby God, Father, grateful. And you will see that once we get to the indicator, I will explain that. Once we start getting to indicator, we are now getting to the complex part of it. Because now we are now talking about confluence. So when we talk about confluence is more confluent. It's more complex. Everything I'm talking about now is just basic price action. So once we get to all these indicators, then that's when some head will start to blow. I can bet. I want to finish that breakdown before I start before I teach you guys the trick that I was talking about. And the trick is still fact too, actually. It's not like it's something that I created. It's still fact. Wetin be boss, abeg na? Kini mo tún ṣe báyìí? Wetin this one dey type? So now I was here. So as at this point, this is where I'll be expecting this price to come. For real. Based on the fact that I have seen this high, this session high. But again, this is the closest, this is the liquidity this pullback wants to come and grab. It is this liquidity. Like I told you guys, it is all about liquidity. Okay? It is all about liquidity. Market is not necessarily going to fill up your fair value gap totally, but it will take out liquidity. That is the purpose of retracement. Yeah. Am I recording? Okay, yeah, I'm recording. So now, market grabbed this liquidity. I'm expecting price to come here. Fine. But it did not. But what did the price do? You can see. Look at what I said. Market start creating a bearish order flow right here. And this is my Asian high. So it came, it took it out. After taking it out, what do you notice? A flip zone. So market did what? Low, high, low, high. So this guy this guy broke structure here. So this guy is supposed to sell, right? But it did not sell. So not selling, it take care. So market took it out. Like I explained to you guys, I was like, when market did something like this, high, low, high, the market broke structure. Then it came here, high, low, then it took it out. Then it took it back down. This point will be responsible for my sell. That's exactly what happened here, right? Market, this guy created this loop. So it is supposed to sell. It sold a little bit, then it cleared them out. So after clearing them out, the market came to the desired direction, which is the bearish side. Then we have your flip zone right here. So this is your sell. So I will have gotten on this sell from here, right? So now, after that, market move, correct? So this guy took care of this guy, all the best. So now we now start another new range. So we have market broke structure here, right? After breaking this structure, we have A, B, and the market is pulling back. Then we have a C, right? After this break of structure. So I'll be expecting price to come and take care of this liquidity as at this point. That is what I'll be expecting. That is what I'll be expecting. But the price did not come there until here. You can see something I told you guys about. No price would go unmitigated. Now, you see, I've not even checked this guy, but I have marked this guy because that is my ABC guy. So everything that is happening here is as a result of order flow, but that does not mean the major stuff will still not be done. So now look at this. Market took out this guy. It creates external liquidities because they are creating bearish order flow here. It took it out. Break structure. Another A, B right here. Then once they broke structure, we have a C. So market took it out to what? To our distance level, to our momentum level. Then it what? It sold off. So I caught this sell. So the target is here. So after that, again, market took care of all the whole external liquidity again, change character, blah, blah, blah. It keeps selling. It keeps selling, right? So after that, this whole sell completed their whole cycle, correct? But the major thing that was expected is right here, which is this ABC, because I anticipated that everything here is an internal liquidity. So I now have like I marked this guy even before I proved to this guy. So you can see that as soon as market took care of this guy, even though it's as a result of liquidity from the past, the market came to it and it what? And it sold off from there. and it sell off from there. Can you see that? Why did the price has to go through all this nonsense? Just simply tell you that order flow, it is order flow. But the major thing, this is the real origin of the ABC. And if I draw my fib from this guy to this guy, everything that happened here did not reach the 50%. So which means even if I am following it, I'm just following the order flow that is happening under here. I still know that my major liquidity is right here. So which is why market now did what? Market followed the whole order flow here. Let's say you followed it, or let's say you just stick to your rules, which is market clearing this guy. So market came to this guy perfectly and it mitigated. After the mitigation, and it gave us the massive expansion that created a new low. Simple as that. But if you had wanted to follow all these ones, you can still, which is, I followed this sell, I took this sell, I took this one after I take care of this, every external liquidity. Anytime I can create an external liquidity like this, for a smart trader, external liquidity, they grab it, just what market what? Give you a reaction, take it out, ABC, then you sell off. Any point that you see an external liquidity from, once you see this reaction, you get in. That is the smart move. Even when it does not have a point of interest. External liquidity, confirmation, entry. External liquidity, confirmation, entry. And they started a bullish order flow right here, just to like start the whole pullback. But once they get to their final destination right here, they print the whole sell. Okay, so now the same thing over and over again. Now this guy too, we have what? A, B, and C. Took it out, sell off. A, B, and C. Took it out, sell off. A, B, and C. Took it out, sell off. A, B, took this guy out, come back here, sell off. So that is that about this whole thing. So now, let's now, I guess I'm clear with this one before I proceed, guys. Am I clear? Guys, am I clear? Guys, am I clear? So now, the same thing over and over again. You just have to understand your trading range. Once you understand your trading range, what you thought? Okay, once you understand your trading range, then that's it. Okay, so now the same thing on this particular today too. Market did what? Boom, boom, boom. Then they took it out, the sell off. They came again, took the internal, the sell off. Mitigated this one, the sell off. They will come here now, order flow, come to somewhere around here, sell off. So that is how they will keep distributing the whole thing over and over and over again. So you just have to understand it. It's not as hard as we make it seem. Not as hard like that. I'm coming. So now let me just use this privilege to like explain the last thing. So what I want to explain to you guys now is the what I used to call it is the indecision candle rule, right? See, this is the trick. One, like just something simple. Now, I don't know if you guys are observant about the charts, but before I even go there, let me explain what is indecision candle to you guys. Based on the word indecision, anytime market is doing something like this, when you look at the candle in the higher time frame, this is what you would see. So what does this thing mean? When you have an indecision, what does it mean? And where does it need to be located? And indecision simply means buyers and sellers are in equilibrium, which means buyers and sellers are fighting. So now, let's not say market is selling. You now get here. Market now does this. Then it now does this. So that simply means at this supply, buyers and sellers, they are trying to sell. I will buy. But what happened after is going to tell you the winner, right? So having an indecision candle here and the market later surged to the upside, it means the buyer overpowered the seller, even though we are in the seller's environment. So what does that mean? That means this interaction right here is sponsored, because forget about it, is a base actually. But instead of you now trying to investigate this smart money reversal in your base, if you are finding it hard to look for it, but once you see an indecision candle in your base or in your order block, any point that you feel like it aligns with your strategy, let's say you have an external liquidity right here, and you now have an indecision candle right here. This is where I'm getting in from the trade. No, it doesn't matter. It doesn't matter actually. So now, this is just the simple arithmetic. So now, indecision candle. But this is now another thing you need to know. That you need to know again. This indecision candle, this lower wick, if it's a buy indecision candle, this lower wick needs to clear a particular wick at the left. Let's say you have a previous candle right here. This one needs to clear this one. The indecision candle needs to clear the previous candle wick. That is if it is in a consecutive consolidation move. Like let's say we have a candle like this, a bullish candle. We have another one, yeah. You have a wick, yeah. You have another. So your indecision candle has to be something like this. Before it can keep going. So no, sorry. Before you can say, okay, you are going. So you can call this your demand, which means the market was fighting between the buyer and the seller, but it took care of a particular liquidity around it. I don't even need to investigate liquidity. I just want to see what happened to the price, to the past candle before the indecision candle. Then I'll take my buy from it. Now let's go to the chart. I don't really want to waste much time from that. So now, look at this. Let me clear this chart. Bro, type English, type English. Now look at this. This is your flip zone, right? The reaction of that flip zone is what? Indecision candle. The market sold off from there. Let's keep going, you will see more. This guy right here, apart from the fact that it is a demand, I marked it, I took that trade from here because of what? The indecision candle. Being where market took care of this liquidity, market swapped this level, market did not mitigate the indecision candle right here before creating a new high, then market came back to mitigate it right here. It's bought. Let's go again. See this guy? I want you guys to follow me through. So you see that it's not like a fluke, but it has to be in the right place. Now look at this again. Indecision candle right here. Market bought. But what do you notice? It took care of this low, right? Now let's keep going. Market flipped this level. Where did it sell from? Indecision candle right here. as the breaker block. Let's keep going. We are still in one place, so we have not even leave. I've not even go far. Indecision candle right here. So now let's keep going. Let's keep going. Now, let's keep going. Market took care of this external liquidity right here. Indecision candle. Entry. Keep following me. It is not a fluke. I'm coming. We have I'm coming. Not a fluke at all. This guy right here is following a particular order flow. Where did he later sell from? This indecision candle right here. You can use this as a breaker and you can use it as what? As your order block. Right? Let's keep going. Let's keep going. Let's keep going. Let's keep going. Indecision candle buy. Let's keep going. Let's keep going. Yeah, it's like you just have to be so smart about it. Indecision candle sell off. Right? Let's keep going. It has to be where? In the right place. So let's keep going. Not like I'm marking it randomly. You guys can go and backtest it. It is in the right place. It has to be in the right place. Look at this. Indecision candle. Sell off. Bro, this thing is not fluke. It's not fluke and it's not a guesswork. It's not a guesswork, guys. Let's keep going. You can see they are in the right places. It can come in between candle, but see, because like I said, if you have an indecision candle, okay, I like that question. Indecision candle, and you have the next candle took it out and probably engulfs it. That simply means this is a consolidation. If I draw this thing out, this is what you would have. Listen, this is what you would have. So where is now your order block? This indecision candle now means you are marking this range out to sell off. So which means it can come first, then a candle can come next. That is number one. The next one is it can come as a result of a violation block, which means it can stand alone, which means you can have something like this. Hey, sorry. You guys should pay attention to this guy's question. It made me remember I need to say this. So it can also come as high, low, high, low. Then what? Indecision candle right here. And it took out this guy. So this guy is your demand. It can stand alone right there. Are you guys, am I making sense? Or it can be as a result of a candle, and the indecision candle would come like this, then clear this low, then buy. Then you will have your next candle whatsoever. This indecision candle will be your guy. This, I've explained 3 ways you can use it. If there is 2 more indecision candle, then the condition. If there is 2 indecision candle, you just have to focus on the last one. Like looking at this one now. You have to focus on the last one. And like I said, you know the right place it needs to be. The indecision candle has to be as a result of a violation block, a other block that takes out liquidity, or a breaker block. It needs to be in the right place. Look at this guy now. If this zoom go and end, I swear. Look at this guy now. Look at this guy. Look at this guy. This is an indecision candle right here. But what did the last candle did? It took care of the low of the indecision candle, which simply means the market was consolidating at this point, which means there's no winner between the buyers and the sellers. Before the market now came, clear the low and buy. This is the meaning of what happened here. Am I clear, guys? So it is 3 types. This is the first one. The second one is the one that the indecision candle took out a particular order flow. Like this one here. See the indecision candle here? You can see it took out this guy. You can see then it bought. You can see the indecision candle took out a particular week of the previous candle before it buy, then it bought from there. But you don't need to twist it too much. We have not getting to other block. I'm just explaining this for you guys. So it needs to be in the right place, which is, you know your strategy, right? All you just have to do is the point you are looking to trade from, you can just use the indecision candle as your confluence. Now look at this. You can see it has to be in the right place. So instead of looking for your buy to sell candle, look for indecision candle instead. That shit is much more, fuck your other block. It's much more valid. Look at this. Way more valid. You can see how many of you that we've marked. It is always in the right place. If we go to a particular time frame now, you will see that this one also is an indecision candle. But what you type in English, you know? Type English. Speak in English. We don't understand this thing. I have explained that already. For you to spot a valid A needs to what? Be as a result of a strong I. I just explained that. That's the first thing I explained today. A valid A has to take out either external liquidity like this one. This is a valid A, or it broke 2 structure, a valid A. A valid A has to be a strong I. Has to be a strong I. Am I making sense, guys? A valid A has to be a strong I. That is it. Don't complicate things for yourself. A valid A has to be a strong I. I'm coming, guys. I did not even see. A valid A has to be a strong I. Correct. And a valid A must have the rule of momentum and distance. I've explained that already, bro. So guys, am I clear with my explanation? And somebody asked a question that I think Shido was referring to. Can the person ask that question again? Can Shido ask that question again? I guess that question makes sense. It can take me more far away with you guys. Let me go to the Telegram and check the question. I think the question makes sense, so it will motivate me to go further. So let me get the question, please, guys. Pairing manipulation and strong eye. Manipulation and strong eye. Strong eye itself is as a result of manipulation. One of the factors of a strong eye is manipulation. I've said that already, guys. One of the factors of strong eye is manipulation. I said we have three types of strong eye. The first one has to be the one that took care of external liquidities, which makes this guy a strong eye. So, and taking care of an external liquidity simply means it has manipulated. Huh? So that's it now. When you have a consolidation like this now, a market came, manipulate it and sell. This is your strong eye. Then you have your B as a result of a breaker. Then they come back for it later to induce it, then drop. I've answered that question already. Yeah, you can ask your question. Let me use this last. What is contraction? Contraction simply means consolidation. So it is contraction, manipulation, then expansion. Contraction is the what? Let me break it down. Contraction is your consolidation. Then after consolidation, you have your expansion, which is going to create an inducement. You have this, you have this, boom, boom. Then you have the final expansion. You can see they broke structure first, induce it, then they do the major buy. Okay, I've unmute you, Oga.
Okay, sir. My question is on.
Speak louder. I cannot hear you speaking loud.
Yeah, can you hear me?
Yeah, speak louder, please.
Can you go to the chart of gold USD? I need to show you something.
Euro USD?
No, gold, XAU USD.
Okay, gold.
Oh.
Less than a minute. Should we do?
No.
Do you guys still have questions so I can come up again? Should we still have the third phase? We have 1 minute left though. Should we come again?
Yes. I have no problem.
Oh yeah, ask the question. So once this one ends, we are going to come again. So ask your question.
Yeah, let me note.
So you guys should come up with your question. I need to go like ask question based on everything that I've been explaining so far, so I can go deeper for you. You know, there are some things that are still here on my head that I might not remember to say. So ask questions.
Yeah, so bro, you said about manipulation is that price should go like this, and then base and drop. This is what manipulation looks like. But here in case, see,